Let's talk about how to avoid taxes, or at the very least, how to pay less taxes. If you're new to the channel and you want to learn how to make more money, subscribe and click the bell. That way you'll never miss a video. Make sure you stay until the very end of the video where I share what I think is one of the best ways to pay less taxes. One option to pay less taxes is to make less money, but of course that's never the goal. So another way you can pay little to no taxes is to make your itemized deductions equal to your income. For the 2022 tax year, the standard deduction is $12,950 for single filers and married filing separately, and $25,900 for joint filers. So if you don't want to pay taxes, then don't make more than $12,950 a year as an individual, or $25,900 a year as a couple, and you won't pay taxes. However, as you might see, there is one major problem with this scenario. No single person can live off of $12,950 in yearly income very comfortably, and no married couple can live off of $25,900 in yearly income very comfortably either. I mean, it could be done, but it would take a lot of work and it probably wouldn't be the kind of quality of life that you're searching for. We want to thrive, right? Not just survive. Therefore, don't worry about this pitiful standard deduction and instead focus on the itemized deduction, which includes property taxes, home mortgage interest, and charitable donations. It goes without saying that you'll need to have a mortgage in order to be able to pay mortgage interest and property taxes. So you might want to think about owning a primary residence, since the government subsidizes your ownership by allowing you to write off your mortgage interest and property taxes. Of course, if you really want to make some good money in real estate, you'll need to own more properties than just your primary residence. To thrive in real estate, you could purchase a rental property. When you own a rental property, you'll be able to use depreciation and the costs of operating and managing the property to your advantage. This will help you be more tax efficient when you earn income. When it comes to charity, it's always a good idea to give money to an organization that you care about and have a passion for, instead of handing it over to the government to do who knows what. Let's look at 3 examples for decreasing your tax bill. Example number 1, how to pay less taxes on income. So let's say your job income is $90,000. And let's say you're making a dividend income of $10,000. So that means your total would be $100,000. Now let's look at your itemized deductions. So let's say you've got a mortgage interest of $30,000, property and state taxes of $20,000, charitable giving, which comes to $12,000, and a 401k contribution that comes out to $18,000. So that means your total would be $80,000. So when we take your total income of $100,000 minus your total deductions of $80,000, your taxable income comes out to $20,000. An interesting thing is that a person still has to pay property taxes to the state, but the good thing is that property and state income taxes are deductible, so the cash isn't put in the federal government's pockets. You can also lower your tax liability by moving to another state. There are some people who even change their citizenship, but this is a much more difficult process. Number 2, how to pay less taxes on rental property income. So let's say you've got a rental income of $50,000. Now let's look at your deductions. Let's say you've got a mortgage interest of $15,000, an HOA, which is $5,000, maintenance at $1,000, property tax at $8,000, and depreciation at $23,000. So that means your total deductions come out to $52,000, and your total tax on rental income would be $0. When you own a rental property, it's like owning your own business. All the costs associated with your rental property are deductible from the income you receive from that property. A major part of the expenses is depreciation. Depreciation is a non-cash expense to give a fair way for the usual depreciation of property. And of course, there's no escaping property taxes, but thankfully it is deductible. You want to convince the city that your real estate is worth the lowest amount of money possible. Doing this will help you pay the lowest you can in property taxes. One small downside about rental property is that it's not as passive as other forms of investing. You can't just sit back and do nothing. It does require some time and work. As you get older, you may not want to deal with tenants and maintenance and the like. Number 3, how to pay less taxes on business income. So first, let's look at revenue. Let's say you've got a bakery and you're bringing in $100,000. And the cost to bake the pastries is $10,000. So your net revenue is $90,000. Now let's look at your operating expenses. So let's say we've got marketing at $5,000, travel costs at $10,000, meals coming in at $5,000, and administration coming in at $5,000. So your total operating expenses come out to $25,000, which means your operating income is $65,000. Now let's look at your retirement deductions. So for a solo 401k, you're at $31,000, and for a traditional IRA for 2, you're at $10,000. Operating income after retirement deductions is $24,000. And you could have other deductions like mortgage interest, student loan interest, HSA contributions, and business startup expenses. So you can see that your taxable income is significantly less than your original $90,000. Keep in mind that starting and growing a business from the ground up takes a lot of hard work and dedication, and it can take up a lot more of your time than just simply working at your day job. But trust me, the rewards can be well worth it. When you have your own business, a lot of your normal living costs could be considered business costs. So if you want to have your yearly board meeting in Las Vegas, then the flights, meals, and hotel can all be tax deductible. Another thing to think about is that as an employee and an employer, you can contribute up to $19,500 in 2021 to your solo 401k, plus 20% of operating profits. In our little example, the person puts in $18,000 plus $13,000, which equals $31,000 that don't get taxed. In addition to that, you can put in $5,000 each for you and your spouse into a traditional IRA. Now, eventually, you will be required to pay taxes on these pre-tax retirement accounts, but you won't have to now. Keep in mind that the sample above is an overly simplified example of how this can work in real life. How your kids can pay no taxes. A great way to lower your taxable income and also allow your kids to not have to pay taxes is to pay your kids from your business. For example, if you are in the 35% tax bracket, you can pay your children to work on the business, basically transferring your 35% tax liability over to your kids. If your children don't surpass the standard deduction maximum, they won't need to pay taxes. You can also open a Roth IRA for your children. Then you can put in the maximum amount each year. The contribution compounds tax-free. Furthermore, after 5 years, it can be withdrawn tax-free. Before I move on to what I think is one of the best ways to pay less taxes, please give this video a thumbs up and subscribe and click the bell. That way, you'll be the first to see my next money-making video. Start your own small business to pay less taxes. I think starting a small business is a great idea for pretty much everyone out there. I also think starting your own small business is one of the best ways to pay less taxes. Simply put, you just get a lot more flexibility with deductions. You can create a website to legitimize your business. Then you can deduct all your expenses and pay taxes on your operating profit. If you want to learn more about how to start your own business, click the video on the screen. Here I'll tell you how to start an online business and how to start making money online as soon as possible.